Good morning, everyone. This is Rose. Today is Wednesday, October 19, 2 minutes after 9 a.m. Eastern Time. Just give me a second, please. All right, so let's see. Okay. All right. So we had housing starts and permits came out at 8:30 a.m. Eastern Time. You got oil report coming up at 10:30. Today is beige book at 2 o'clock. And before then, we will have Fed members, and after that, Fed members will speak before 2 p.m. And after 2 p.m. So 2 p.m. beige book is an important event, report release. So you guys really need to pay attention. It can act like FOMC price action. Okay. Good morning. Good morning. Okay. All right. So here's your Globex chart and the range that I marked up for you. We are above on the hourly. We're above this trend line, which I wanted to see if we could get above it, which we did 2 days ago, and basically that's how I knew that we were going to be bullish and go back up to these levels. Now, after we getting above it, we actually sold, and now you can see that we're in a trading range. I no longer need this, but it looks like bulls are trying to reach this trend line up there, but we're in a trading range. So you could see that this high of that trading range we could get rejected, which looks like we already have. So this isn't really showing, this is RTH, so it's not really showing. Let's see, what time is it now? It's 9:05. So it should begin with 9:30. Now on the daily, we are in this trading range that we already talked about a couple of days ago. And I said we're going to go sideways, but we are going to try to reach the October 3rd high. And that's what the bulls are trying to do. But you see right here, sellers were pretty active. So we're getting some kind of a rejection there. And yesterday, we had a swing short and bounced at the Globex low. And you can see right there, I went long right there, which was a great swing long. The Asia session being all the way at the top broke down, and London and into EU, they sold it. So when I say EU, it's really Frankfurt. So I think it's Frankfurt, although I'm not sure. Is it where the Borsa is? I think that's the Börse. We say Borsa. I think that's what they call it. Or maybe it's with the I'm not sure, but that's I think that's where it is. So it bounced a little bit, but it's a bear flag. You can see once something moves underneath that VWAP, is that strong and sells it by gapping down, the first touch, you're going to get a major sell, short swing. And that's what they got since 6 a.m. Eastern Time. So right now we're at the low of Globex range, and we do have this area. Okay, so structural breakdown, but bulls really couldn't show anything there. Now, we might go a little bit and we could get rejected. So there is actually a strong trend line is they are breaking at the moment. Now, can they go further up? Sure, but this area, breakout test, if we test it, we could come back down one more time before going back up perhaps. Now, I'm going to look to see if that's the case. If we're going to make some kind of a higher low and reversal back up, we must have some kind of a wedge here. So here's maybe 1, 2, 3, or 1, 2, 3, or we're going to go up, we're going to come back down, make a new low, and then we're going to go back up. Now we're in a trading range. Okay, it's on the 5-minute chart. You can see, but it's also a bull channel. Okay, we sold, we rotated, we tracked the sellers down here, and then we became bullish. It's kind of a trading range from yesterday, but really we are in a, hold on, bull channel here. So you guys need to pay attention to that, because we can come right back down to here. So I'm going to take this channel. It's a pretty wide and broad channel. Okay. You can either try to connect, but you see, we kind of undershoot that level. So I wonder if we're going to come back down. Now the price already came down. Okay, 37.07. So we are down 37.07, but we are already here. So when the market opens, RTA chart, you're going to find yourself right around here. So basically, we will be touching and testing that low of that channel, and we could actually bounce. Okay, so let's see what the bulls have in store here, because if they find this area good enough to bounce, we can go right back up to these levels. October 3rd high is right here, and September low is also here. So we're in between these two levels. I'll also check something else. So that right there is monthly open. Just want to see where we are with that. Okay. Weekly chart, you can see that we are in a trading range and bulls are trying to reach these highs. But June low, we got above the June low. I believe that's June low. Yep. And so week is currently above it, but bears may want to have a double top and try again, but it's a really strong bull at the moment, bull bar. So let's see if we can actually continue going up. But on the hourly, we're in some kind of resistance, although that's pretty high. So we actually sold. So what is it? 37.10, 37.09. So we're going to open up. So we did come down from there. So when we open up, we're going to be down here at support area. So we're in a trading range. So the high of the trading range, the low of the trading range. So we're going to open up around here. We might just go back up. So I'm assuming bulls are going to try to get above 37.16. And if we do get above 37.16, the next target will be 37.25 on your smaller time frame chart. Yesterday, let's take a look at what happened. We opened up, we gapped up significantly. Bar one was a strong bear close bar. So because of the gap up and the average price being too high, so they're probably want to sell. The bears actually put their sell stops there, and then probably sold it right there. But I waited for the second bar, and I saw two bar overlapping trading range. I was not very happy about that, but the bulls couldn't really go up and closed here, so that's still slightly bearish. So and then you get the third bar. You can see that the bears are trying to sell this. Then you get a strong second leg, not really strong, but the second leg down, but it finishes kind of strong. Now the problem here is that you already made it two legs, okay? And we're gapped up, so we're still bullish. So bulls are looking to buy again. Now they tried here. Unfortunately, they failed. So the limit order sell right there and they sold it. So we have new low now. Okay, so we have complex leg 1 and an actual leg 2. Now, at that time, at the EMA, I looked to see if we would actually make some kind of a double bottom and try to reverse. But the gap to EMA closed. So the bulls tried again. So they're trying once and they're trying twice. They failed yet again. So now we're making some kind of a bear flag. Here is your first sell. Here is your second sell. So 18 and 20 are bear flag sell signals. So you're looking for bears to cross underneath bar 14. I looked for a wedge at that time, and I said maybe, just maybe, bar 20 could be a third leg down, but bar 20 is an outside down bar. Its high is higher than the bar 19, and it's significantly lower than the bar 19. So that bar is going to sell. At least leg or two, it's going to sell. And it started to sell. It started to gap down. And you can see if you haven't sold 20, you're going to have to sell 21 because it's going to go down. It's going to give you another leg down. And they did. So at that time I said, watch out because bears are trying to break below the Globex low because there is a small gap there. And but once we close that gap, don't expect too much selling because suddenly we could close that bear bar inside the Globex range and all we could have a wick. That's what I said it twice. So I said if that happens, that means the bears are going to be trapped there, and that's a great place to buy. So I would look for some kind of a bull signal bar. Then because all of this is basically imbalance, and bulls are going to try to close this imbalance and get to this area, and that's exactly what they did with leg 1, pull back, leg 2, and that was a good swing. So then I started to look for a much better wedge reversal, and I explained. I said I'm going to look for I'm going to look for bull bars closing above bar 26 high, okay, and we got one bar 28, but that's a breakout of this small trading range. You always expect some kind of pullback. Now, we got the pullback, but the bars are going higher, are smaller with really tiny bodies. So that could come back again. In fact, they just tested again with 32. It scared everybody. So what they're doing is the market makers are putting a bear bar. Okay, they're showing you something that actually is a momentum. Okay, and then it breaks out, and then it just comes down so fast. I mean, it was a bear bar 1 point, but I said that's a trap right there. They're trying to shake out, okay, these sellers who are trying to sell here. It's already too much down. It already sold a lot. So also there are sellers at the EMA. So not only they made it look like it's selling, suddenly they made it, close bullish. So if you sold it and you see it actually it closed bullish, you need to reverse right away because this is going to go higher. A bar like this is going to go higher. So if you actually bought the close or one tick above, right, so you're basically thinking the price is going to go to a breakout test area. First it went there, 2 bars, came down a little bit, found even more buyers because this is now a bull flag and there's a small wedge there. So look at it, right, up on this, down on this, up, down in 1 bar, and then goes up a little bit, comes down with 36, okay, and then finally goes right back up. So bull flag breaks out. Now you have maybe 1, 2, 3 wedge, higher high. They tried a major trend reversal, and then they also tried some kind of, they saw a bear flag, but that bear flag died right there. Okay, so it didn't do anything. All they got was a basically double top neckline, first leg, supposed to get a pullback and a second leg and another leg. If if you can't even get the second leg, that means this isn't a bear flag. They're trapping you yet again because they're trying to get back up to here, okay? They're trying to get back to first this bar 19, okay? And then they're trying to get to the bar 18, either high, mid, or, 16, or low levels. And that's exactly is what they did. So I kind of took profit with bar 19, and I didn't really care for bar 16, but that's where they were trying to go. And you can see there's also a wedge, kind of a wedge here. If you can't really see it, go to 2-minute or 3-minute chart and you're going to see it clearly. You see these two bars, 42 and 43. There's actually a bull bar there. Okay, so there's actually a pause. You see that 43 high? See that 43 high? That's your pullback. When you see two bear bars like this, you do not need to go down on the time frame. You see two strong bear bars like that, and the last one has a wick like this. That's actually pullback, and this is your third leg. So I count it like that. So basically, this is your leg 1, pullback, leg 2, pullback, leg 3. So there's a wedge there, okay? And you can buy above 44 at this point. And if you're not so sure, then buy above 45 or the close of. You're still not so sure because you see a trading range, fine. Buy the pullback. You got two bull bars, limit order buyers, either right above 44, they're going to buy there anyway, okay? But they're going to buy. So when they buy, this is where they're trying to go, and most likely they're going to break out, okay, because this leg needs a second leg. And it's because that pin bar is where they're trying to go, or the whole thing, the whole area. So that's what they did, and unfortunately, breakout failed. Now you have bar 49, a breakout bull bar. Okay, so the problem here is that that breakout is not getting continuation with the pullback. Pullback is bar 50. They should have not closed that bar on its low like that. It's lower than its midpoint, so it's a bear bar. So because it closed bearish, many of the bulls who bought here got stuck, nervous. They're buying underneath these bear bars, hoping to break even. Okay, so they're disappointed. And other bulls, okay, might actually get out a couple of points below here, which they did, but the strong bulls bought anyway, and they finally got out because they don't see bull breakout bars yet again to continue furthermore up. So you get the bar 54 at doji. It's telling you again, time to get out, okay, because this is probably going to come down here. I was telling in my Discord that this looks like some kind of a inverse head and shoulder, but it's just not the right kind. It should have been like this, okay? But I saw this and I said, I don't like this, but it still looks like an inverse head and shoulder, and there's a double top here. And if bulls are trying to, break above this double top, we get a really nice measured move target to the upside. However, once I saw what was happening here, I got more information right there, okay? And I start to see, okay, bulls are not able to break out. They try to break out once, they try to break out twice, failed. I now see a very dangerous pattern. Dangerous pattern because it's a tight trading range, but it's a head and shoulders pattern in a very tight trading range. This is explosive, okay? When I see something like this, because they're hiding the fact that there is a strong, okay, balance zone, and now I see clearly this is a bear flag. And bear flags, okay, generally, they're going to show you, especially if there's some kind of a wedge, maybe 1, 2, 3, 1, 2, 3, they're trying to show you that this is going to sell, okay, and it's going to make a head and shoulders pattern. I saw this, and I literally wrote it. I said, I don't think this is a head and shoulders, inverse head and shoulders anymore. I think the bears see a clear bears flag there. So I'm looking for a double top, higher high, okay, and a lower high reversal. That's it right there, and we ended up getting this. I don't care you call it news. I don't care you call it, oh, why did that happen? We were so bullish. Well, you're not getting quality bull bars, okay? And you're getting this area, and you get bar 62, that's a surprise. Everybody was surprised, but I saw it coming right here. I saw that coming right there. I said, you know what? I think I'm just going to get out of my long. This is it. You know, I don't care anymore. I was long here, and I took profit there. I left, I think I got back. I didn't leave a runner there. I actually exited out. But I might have bought bar 59 because it was legit. I mean, look at the bar, right? It's an outside up bar, but it went up with bar 60, and then you know, I don't see anything happening there. Then we get 61. Then I started seeing all that I just talked about. Then bar 62 happened. That's where I got out. I think I got out with 61. I'm pretty sure I did. And then bar 62 happened. I sold that, and it comes down, and I might have, I don't know. I think that's what I need to go back to my chart and look at the chart markers. I think that's what I did. I remember selling 62 vividly because it's a surprise bar. It's going to get a leg or two. Here's your leg one. Here's your leg two. And again, this is actually some kind of wedge. Okay. So maybe down, up, down, up, down. Okay. So now we're testing the low, okay, of this, what seems like a trading range. So I'm thinking, can the bulls take over one more time? So this is the last bar. I marked it. I marked the 50%. I'm looking to see if the bears are able to close below that 50% and then try to break below that last bar and then break out to the downside. They failed. So they failed. They couldn't close that bar 69 on its low. Okay. It did kind of close in the middle, but I didn't see it. And then bar 70 happened. Okay. So here's first entry, okay, and here is second entry, high close. If you don't buy one tick above 70, then you're going to have to buy the close or one tick above 71 because that's going to go up. So first it's going to go up to here because why? Well, there is a pause there. So they went and actually test above, and they're trying to close this gap, right? So we try to go back up. When you see a gap like this, okay, look left, find the bull bar, okay, mark underneath that bull bar. If you're long, that's where you're going to take profit. You're going to get out because it's going to pull back. Now it pulled back, but the bears are not able to print bear bars. So this ended up being a bull flag, and you got a beautiful buy signal bar at the EMA 78, pull back and buy and go long. And that bull flag actually broke out, but they kind of ran out of time. Now, if you actually look at the ETA chart, this was going on and on and on and on. So let me show you something. That's right here, okay? So basically this area was, I think that's right there, yep. So this area was support, resistance turned support, came back, tested. For the second time, it came down and tested. Okay, so the buyers did show up right there, and they kept buying and buying all the way up there. So if you actually say you bought there, you're stuck there, that's 1-to-1. See if they actually got 4-to-1. Nope. 3-to-1 they did, kind of, and then it started to go sideways. So I guess you could say just about 4-to-1, but you're buying right there. Okay, so they probably, if I measure it like that, that's 4-to-1. You're going to get this again, so I'm showing you how to find. That's 5-to-1. So not bad, not bad. I don't think they got 6-to-1. Nope, they couldn't. So if you enter with that bar, you put your stop here, and you get just about 4-to-1. And then it started going sideways. It started to distribute after hours, if you're an after hours trader, right? So you have a kind of a wedge here, and they broke it, right? Or channel, they broke it down, and it came down from there. Or you could say, well, if I take from there to there, They got the 50% pullback. They also got down to the 1/3, lower 1/3. Or if you're measuring here, that's not how I would measure. This is where you measure all the way down, all the way up. So there was a bounce at the 50%, but that's all you got basically. Okay, and then it continued down, but that's where you got the buyers. And that was the London session, but that's a bear flag. So the bear flag is now reversing from the upper 1/3. So if you have a trading range, this is upper 1/3, this is lower 1/3. So they're selling in that upper 1/3 of the range, okay, into the lower 1/3. So that's how you swing down if you're trading this ETA chart. So we have a clear trading range, pretty large one on the ETA chart. Now, if you go here, okay, so we're going to open up. Where are we now? Okay, 37.10. So 37.10, somewhere around here. We already tested the low. So let's see if we can actually continue to go up at the open. Okay, market is open. Trading range open. We're going to have some volatility starting maybe tomorrow. It actually kind of started, but I think tomorrow and Friday we're going to have a lot of volatility as we get towards, closer towards the end of week and then end of month. The second half of the month, you always try to get, and then if the options are going to expire, that's towards the end of the week also. So you get this volatility. You end up seeing like this, the ATR closer to 20 point. So I like to see these bulls push. All right, we tested the 37.16. Bulls need to close above it to get the 37.25. 37.25 is the target. All right, so let's see if they can push furthermore up, or they're going to get rejection here and then come right back down. But we're at the low of a trading range. Now we broke that trend line on the Globex. There is a breakout test area that I marked. Okay, so they're trying to go back up and test that, and that is 37.21 area. We might go above it slightly. Resistance starts at 37.23 to 37.29. So we're going to go test that area like I posted in the Discord, both Discords. I like to see a little bit more continuation, but I think they're going to come down from there, so be careful. Or they're just going to buzz through it. I don't know. It's the open, so we have first bar bullish at the moment from down at the low of, I'm going to get rid of this channel. You kind of got the point. So let's see. We're opened at the bottom of trading range. We do have a magnet here that we did not use as support. So I don't know if we would come back to it, but look what just happened at the Globex. So we just tested that breakout test on the Globex level. Now, we're closer to the Globex low than the Globex mid or high. So can we come back down and actually break the Globex low? We could. We're bearish. I mean, look at this bear channel we're in. Okay, so I do have, if I put a trend line for bulls, they're trying to get back up to the VWAP. Okay, that is VWAP. They sold underneath once. They touched and sold. That was a swing trade. Now, there might be sellers still waiting there. Okay, so I'm not bearish because the bar one is a bull bar, and we kind of tested that channel low. We kind of tested the trading range low. So I actually, believe it or not, both at the low right down here, and I was long, and I said I am going to wait for bulls to test the 37.23.24 all the way up to maybe 37.29 area. We are testing it right now, so I took profit right here. Now, if the bulls close the bar bullish enough and then open a new bull bar, okay, the target is going to be the close of yesterday, which is right here, the bar 81, and that's where they're trying to go. 2 bull bars would make us bullish, okay, at the open. However, you are in a trading range, all right? So we might just go here and come back again. That would be horrible. So you might want to take profit along the way as you're going up, because anytime you get these bull bars in a trading range from the lows, that's kind of a leg in a trading range, and they get reversed at the highs. So I think the bulls are trying to first get to the EMA, and they're trying to get to the bar 81 close, most likely. It's the top of this trading range. Globex chart, 15-minute chart traders, VWAP, and those arrows are target, but really this falling trend line is target. All right, so we have a really strong bull bar, okay, so, and we actually tested above it. So there were buy stop orders immediately dropped above that bar, okay? So if this bar, second bar comes down, what I generally do is I measure the length, the range of that bar, okay? See where they're going to bounce or where the buyers could be. Buyers are here, buyers are here, okay? And because they're disappointed with this open, they immediately thought that this would go up, but that's still okay. That bar hasn't closed any bearish. So there are buyers, stop order buyers above. They're wanting to go higher. But if it doesn't, I'm giving you some kind of parameters that this could come down here before going back up. And that would be a really nice thing for pullback buyers, because they want to buy low. I mean, they already bought low here, so I don't know what else do they want. This was already low enough for them to buy. So let's see how this bar closes. Right now, buy above bar 1. They're trying to make money, and it's probably going to go up here, 33.50. And if the second bar actually closes, second bar closes on its high. Now be careful, because we have resistance around 37.35 area. This bar has to close like doji, maybe with a tiny little bear body that would still get continuation to the upside. In fact, we could end up going to 37, what did I say, 37? 37.37? Or 37.38 area, we could still continue to push. But we'll see. Another reason why we're getting this doji, bar 2, not immediately buying. Look at this area. This is a balance zone, isn't it? So when we get to the balance zones, we pause, briefly at least. What if this becomes a one large bear bar and overlaps 70, 60, or even 80% of bar 1? Well, then you're in a trading range and you're getting a trading range price action. Now, I'm still flat. I did not buy above bar 1. I was already long down here at the low, okay? And I took profit where I said that I would take profit from 37.23.24 area to 37.29 area is a resistance. And no matter how strong we get there, okay, even with close strong bull bars, we're going to pull back. I just didn't want to be in that pullback. Okay, I just want to enjoy my winnings, so I exited out. Now I want to buy again, but I just want to be patient. I have no rush. Because I see the buy to close and stop order bulls are not making money. They're struggling right now. So it's coming down to those areas that I, talked about, the 50% of a strong bull bar. It always, limit order buyers are there, or a pullback to that 66, because what is 66% and a 33%? Just like I showed you, any kind of range, L. Brooks divides it into 3 sections, okay? He knows that there are sellers here, there are buyers here. So anytime, you see a large bar like bar 1, that's a trade, it has a large trading range on its own. So there were sellers here. You could come down to the 50%, but it could still come down here before going back up. That's a deep pullback. So now look, the first buyers did show up. Look at that bar 2. So this kind of proves my point. Look at bar 2, just came right down to the 66% and just bounced. You see that bounce? I don't care what you think that it's still coming down, but this right there, that right there, buyers were there. So they did try to buy. And in fact, look what they did. So if they actually bought there, right? They bought here originally, and then they bought here. Did they break out or what? Look. Why did this bar came down? It's because these bulls broke even right there and just got out. And now that's why you're getting bar 3 plunging. See, this is another reason why I did not want to be in my long. It's just nothing happens for random, okay? Out of blue. There's always a reason. And I show you guys how to find those break-even levels. You want me to repeat it? If you didn't catch it, let me know. Okay. So I said bar 1, right? We are down. I'm going to go back a little bit. Why I bought bar 1. I kind of explained that this is a trading range now. We're in a trading range, and we're kind of at the lows, okay? So, and also the Globex session, we're at the lows. We have no breakout, and we have a strong bull bar here. So I was long, but I said I do see a resistance. Okay, I saw that resistance right there. Now, if I look at the RTH, I see the resistance because there's a balance zone. But if I look at the ETH, what do I see here? Say you're not looking at the Globex. You already see it. I show you that. But what do you see here? Where's your resistance, right? Look at this 1, 2 big bull bars and a breakout. Right around here is resistance. Look at that. And I said 37.29-ish to 37.23-24 area. So when the bar gets there, I'm going to take profit because this is the first time we're touching. It's going to, slap the price down, and the bulls are going to be stuck there if you're looking to buy 1 tick above the bar 1. Now, let's go back to RTH because we trade RTH. So, bar 1, beautiful bar, but you're in a trading range. And you're going towards into this balance zone, right? They were up and then they sold again. So, sellers are waiting there. So, but say you bought it. You bought 1 tick above. So, I'm going to zoom in so you can see exactly what I did, right? First, you buy right there. 1 tick above that high is 37.29, right? So this is where you got filled. 37.30, you make a point, price needs to go to 30.25. They did. They also went to 31.25. ATR is so much that you don't have to just scalp a 1 point. You can double that minimum 1 point. You can try to scalp a 2 point. So these bulls actually did scalp. But their runner, they were hoping it would go to the close of yesterday or the high of the trading range. But they got stuck there. Then I said to you, now these buyers got stuck and they need to fix it. They need to get out. Some didn't even scalp probably 2 points and they're completely stuck. So what are they going to do? They're going to measure this bar, and because it's a big, large range on its own, right, as a single bar. Now, when you have a range, trading range, if you divide it into 3 sections, that's the first section, okay? That's the second section, and that's the third section. 1, 2, and 3. Buyers always here at the bottom section, 1/3, and the upper 1/3, okay, that's where the sellers are. So if they're selling here, where are they going to buy? Probably right around here or somewhere here, the 50%. But first, machines are here at the 66. So I bought there, right? So I bought here originally. I'm going to start from there. Then I buy right at the 66. So I'm measuring 50% of this new range. When you buy here again, your entry price moves to here. This is where you exit out. Average exit break-even price before it comes down. It can still go up, but in this case, these bulls didn't see a light, okay, at the end of the tunnel. They said, this is ridiculous. This is going to come down. Let's get out. When there are no buyers, bar 3 did not go higher to the close of bar 1 or higher, so that's giving up. This is where bulls are giving up. When the bulls give up, you end up getting big bars. So where's it going to go? Maybe some will buy here. Maybe some will buy here. But you should have gone out right there. So that's how I measured it. So some did buy here. Maybe they just loaded up and they're still trying to exit out. But I'm not one of those, so I dodged this one. All right, so what happened? We did not get, so you could have done what I do most of the time, right? So what do? I wait for 2 bars. I don't do anything, bar 1, bar 2, I don't touch it. So because you need information to trade. So if you're new, just wait. If you really want to be, bullish and you want to buy, see if you got another second bull bar. Then you can buy. You're definitely going to go up here. You got this much to scalp and see if they can close above close of yesterday and try to get to the high of yesterday by keep going up and up. That will be your runner. But did you get a bar 2 closing on its side? No. All you got was a bull trap right there at the balance zone. So now what did the bears do? Well, they sold right here. Now they probably sold that close as well, and they're making money. So we're back to the low of the trading range. Just for the reminder, I'm just going to put back that channel one more time. Okay, so I could take it like that. That would be overshoot, so that's what I will do. Or you could just put it right there. You would have a broader channel, but I'm going to take this one. So what are they doing now? They're coming back down, so they were not very happy, I guess. So we might end up coming down here before actually going back up again. That's one thing. So I'll leave it there. Now on the Globex, if you're trading the Globex, I put that line there and I said we're going to test it. Now we overshot it, and I said if we do overshoot it, we're probably going to go to the VWAP. VWAP, we were under and we were selling. That was the first touch. They even sold the second touch. Doesn't mean that this is going to break out and sell further. We are closer to the Globex low. But what if we don't break out from the Globex low? That's fine. I would look for some kind of a bull bar. That would be my neckline, okay? Higher low. And I would like to go back, maybe breach that neckline, use that as a support, and then go higher and higher, maybe to this area. But right now, if I wasn't talking, I would have sold. But at that time, even if I sold, I would have probably scalped somewhere down here because I'm selling into support here. When you sell into a support, it's never a good idea. But now that I have a channel, I see where they're trying to go. There's also a magnet, 2 magnets, low of yesterday and the 1 hour EMA seems like where they're trying to get down to. So look where we are on the hourly, 1 hour EMA. This is also a much bigger balance zone here, okay? And we kind of trapped the bulls there yesterday. Now we're back down. We have equal lows. So Bears are selling, but they might just, bulls might trap the bears there. Be careful. So we're in some kind of a expanding triangle also. Like this, maybe. Maybe like that. It's not the best one, but you got the point. So at this point, I'm looking at the magnets, low of yesterday and the 1 hour EMA and some equal lows. So we know there's a sell side liquidity here. There are stops. What is a liquidity? Liquidity is made of a bunch of stops. Stops for those bulls, okay, that the market makers want to run and shake up the market. Or some institutions have sell stops. They're actually betting for market to break there and then keep selling and selling. Okay, so there are two types of stops. That makes it a liquidity zone. That makes it a magnet. That makes it an attraction area for other market makers to go and test. This is where a lot of people get upset. Okay, so, and that's why we ended up coming down now. So if you actually sold bar 3, now bar 3, how would I sell bar 3? Would I sell one tick below? Is it a good idea? Selling one tick below? No. It has a big wick, okay? Look at that. It's got a really long wick there. So I am not going to sell here. I've got a better price. I'm going to put my sell order at the close, and when it bounces, then I'm going to get in. Now, if you actually sold below the low of bar 3, you're selling into a resistance. Isn't it better to sell with a pullback? I would never sell under 4. Never. That would be it for me. Because you're right at the low of the trading range. You know there are buyers there. And also Globex low. We may not break out of the Globex low. Now look what's happening at the Globex low. We might be getting that double bottom neckline. Double bottom. If this bar closes like that and we get another bull bar, bulls are probably going to want to get back up and test that wick high. So I don't want to be stuck in that. Can bears sell the pullback and still wanting to come down here? Sure, they could do that too. Right now it's trading range market with a bunch of overlapping bars. Breakouts are failing every step of the way. Now we have 2 failed breakouts. What does that mean? A measured move coming, okay? A big breakout is coming. So bulls failed, first one. Bears failed, second one. Market is making a decision here where to go. It's just shaking up everybody. Everybody's upset right now. Those who bought the bar 1, upset. Those who sold underneath bar 3 and below maybe the close of bar 4, they're upset. So, but the patient people, traders, now they will be very happy if they just wait a little bit more. And that's what you get if you go to the blogs, the brookstradingcourse.com, okay? We have a blog section that Brad Wolf and Andrew, I don't know Andrew's last name, but Andrew A, you know, and L. Burks, they all update it. Imagine I wrote that blog. You would be still reading. You would start on the weekend and you'd still be reading that. So that's a good thing that I'm not writing anything. So, but what does, you know, Brad says, he posts the same thing is almost every day. Okay. It's because it's reminding you and saying to you, if you're not sure what's going on, just wait for 6 bars, 7 bars, even up to 12 bars until you get a good direction. There's a reason why he puts it there. So 20. So the 1 hour EMA is 20 bar. 37.16 area is proven to be a important price point. Bulls need to close above it. If they do close above it, they're going to try to get back up to 37.25 one more time, or 24. So I'm watching what will happen at 37.16. If we start to get bull bars, I'll be interested in buying, but if they fail, I don't want to be stuck. So we have, this could be a 2-bar reversal, but I think it's too early. It's overlapping bars. Bears totally got stuck here, so they're going to try to sell at these highs to break even somewhere here. But they could also sell to go down and test the low of 4. You can use 200 EMA on the ETH chart if you like. That is almost equivalent to 1 hour EMA. So did we gap down? Did we not gap down? We did not gap up. Now we have a slight gap down. We opened here and then we went right back up. So that's still a gap down. And now what could happen here? Well, we could go back up and get a double top at the EMA, or we're going to make a wedge and then we're going to go back up. So I'm going to open up some examples to go over. If they do break this, we might get some kind of a measured move down. That's what the fight is about. Bulls are trying to prevent that from happening, and bears are trying to break it so they could get their measured move down. Looks like that channel low is attracting. Just want to take a look at the ETH. See, our support is still holding, but if we do break that support, I'm afraid this could end up being a measured move. Look at that big structure. Okay, so watch out. This could come all the way down here. Where could that go? Oh yeah, look at this right there. As early as we can bounce there. But right now we're in a trading range, and the low of the trading range holding because it's a support. So you got, if this is 1, 2, they're trying to get the third push down before trying to go back up again. But if that reversal fails, we end up getting a measured move down. So maybe something like this. See, we're up, down. Actually, 1, 2, or maybe 1, 2, 3. So we go back up to the EMA, but it makes a bear flag there. So the first sell and second sell, and you can sell right there. You're hoping that this low is going to break, and you're going to get a measured move down, something like that. So that could be it. It's one way to do it. Looks like that channel low is still attracting, and the Globex session is trying to still break out, but it hasn't, so I can't really say that it will break out. We have no gap to the EMA at the open, so we're not that bearish. But look what's happening. The two EMAs on the 5-minute chart are kind of a parallel to one another. So how would you trade this? You're in a trading range, so we know that. And now another sign of trading range trading, you buy lows, you sell high, okay, is that when the two EMAs are parallel. So what does that mean? You see a bear bar, strong bear bar closing, gapping down from the EMA closing, you can buy that close. You see a strong bull bar at the EMA or above the EMA, they're going to sell it, strong bull bar. So until they get a breakout. Here's another one, another example. Could this day be a strong bear day suddenly? Sure. Check this one out. We're up to the EMA. Can you guys see this? Do you want me to make it bigger? I mean, I can see it, but it doesn't mean. I assume you can. Okay, so we're up, we're down, we're back to the EMA, so we might go back to EMA. We couldn't even get above the EMA, and they sold it. But bear flags are not really, breaking out. And in fact, this isn't a bear flag. So, but this is. And you get a triangle of some sort or a wedge, and finally that wedge gives in, and we keep selling all the way to I don't know, is it 130? Yeah, so that's not good. We could get that. Actually, it would be really nice actually selling this, right? We'd make a lot of money. But up until, this is California time. So 11 o'clock, 3 p.m. Eastern time, okay, we've reached the EMA, and then yet we sell again. Why? Because you have 20 plus bar gap to EMA. First touch will sell, and they get 2 legs down. So this could be also an option. Now, here's another option. This is option number 3. Kind of similar to what we have. Expanding triangle, okay, comes down, goes right back to EMA, okay, and then they get a major measured move down. But although I don't know, this kind of started early, but you got the idea. And then small pullback bull trend begins, and it goes right back to that area. Okay, where's that area I'm talking about? That leg 1, pullback, leg 2, that bull bar. See, it goes up, comes down, and then goes back up, tests this gap, closes that gap, and then comes back to EMA. So that could be us too, but we'll see. Right now we're going back up to EMA. I want to see what will happen at EMA, because 2 EMAs are even more flat now, flatter. So that means a bull close might be sold at the EMA or above the EMA. Okay, don't be so excited about buying. I'm trying to find options for, bullish price action that we can actually reverse here, and we could. Now, how could that be? Well, we're at the trading range low, and if you actually wait about 7, 8, 10, maybe 12 bars, right? So this is your trading range high, and this is your trading range low. So we could go up, we could come back down to the 50%, and then finally we get a nice big bull bar. We could keep going up, but I don't know. I want to see what the bears are going to do at the EMA at this point. So you have a big up, bar 1 at the open, then you get a big down, okay? So you have a trading range. You also have now a triangle, so we're trying to break out of the triangle. But remember what happens to the breakouts at the triangle. 50%, it could fail. Even if it breaks out, it's going to fail. Unless we get a really nice strong bull bar and gets a follow through, then yes, that's a true breakout. Price-wise, bulls are trying to close a bull bar here. They want to go up and test the 37.23 again. Bears want to keep the moving average gap open so they can sell. I like to see 37.23 tested. If this bar closes bullish, it might even go up and test 24.50 area. It's the second entry long. First entry long, bar 5, and a second entry bulls are trying to, they already activated the second entry long. They're just trying to get back up to the bar 2 low or bar 1 high, or the wick area, bar 3 wick area. And some bulls might have bought down here and they might be still trying to break even. Well, they got their break even. They might be still holding on to their last contract, hoping that the price is going to go back and test one tick above bar 1, so they can actually safely get out with that contract. But this bar has to close on its high, and it should not fail. And if it does fail, it's because bears want to sell this with a gap open to the EMA. So on the Globex, again, double bottom, we're failing, okay? So what are they trying to do? They're trying to get back up to that breakout test. They're trying to get to the VWAP, and let's see if we can actually test somewhere around 21 to 24 or 21 to 24.50 area. So bar 8 closed nicely strong, okay, above its midpoint, because that's a second entry long, and bulls are still trying to get to the EMA and close a bull bar above the EMA. But the bears got a whole different idea. But that should get another small leg up, right? So it's the second entry long, needs at least another leg, quick leg up. If bears take out the lows, especially that bar 7 low, that'll be very difficult for bulls. It's a triangle, okay? We're still at the apex of the triangle, no breakout. Could this be just a pullback? I think it's too early to sell and call this a bear flag, although there is a wedge there. So we're up on this, down on this, up on this, down on this, up on this. Some machines do see the 3 push already, which is tough, but it's there. Or some will look at it as a no, this is the first down, second down. We just need to push one more time and get above the EMA with a bull close. Maybe that's the one that the market is going to sell. So that's why we're stalling here. It's because some machines see this as up and down, already a wedge. So I don't think that's the case. I'm going to call this as first up, first down, second up, second down. So we need the third push. So we need a complex second leg. If this is the first leg, pull back, I need a second leg, and generally one of the legs are complex, so that second leg breaks into 2. So if this bar 9 a pullback, then I need that complex second leg's second push, if it makes any sense. Just trying to break it down for you. But so therefore, I still think that bulls might have a chance to go test the 37.23 to 23.50, maybe even 24.50. I'd say I think that's what they're going to test, 24.50. So we're still buy above bar 7, stop under 4. But the EMAs are very parallel to one another. And some machines saw the 3 push and they thought that the bar 8 is a good place to sell because it closed above its midpoint. But come on, you know, we're just so close to the EMA. I don't think that's a good way to sell. I think the reason why they're trying to sell underneath the EMA because of bar 1, they sold that close underneath the EMA. So some machines will try to repeat that. But I think it's just too early, too premature. I like to see this leg go up because it's kind of a slingshot for bulls and they're trying to finish the job. So I like to see where are my targets? 2450. I want to see 2450 tested. So that's my target. And the first target is 23. You can take profit right here if you like, or just hold on, hold it until 2450. And that's where I'm going to take profit. Well, I'm going to take profit one tick under, but it should tag 2450. I just took profit already, one tick under. I don't think it tagged 2450. Because I know what machines do. They're going to play with your emotions. They're going to start taking profit and start plunging down one tick close to the target. Okay, so the target met, so I was right. All right, well, congrats to those who actually bought and held. Did anybody make money here with that target that I gave you? Look at that. They're taking profits, plunging quickly, but I'm out. I'm flat. So can this continue to go down? It's trying to test 30.50, 37, 30.50. And it's probably going to get it. That's it. So that was the next target. Can they actually go to 37.75? That's the next target. 37.75. But I'm out because we're at this trading range. There's a double top here now, and it is about 10.30. But good for the bulls. I mean, look at this. Now they're trying to turn the market into always in long. If that's the case, say this bar 10 closes on its high. Well, it does represent a double top here, so which is kind of iffy. So I would say, you know, if you haven't taken profit, maybe you should take profit. Okay, so it's trying to reach to 37.35 to 37.38 area, just rounding. Okay, but there's a double top, and in order to continue to go back up and close this gap, maybe even reach the close of yesterday, we need this bar to close up here somewhere on its side, not below its midpoint. If that's the case, remember, we have two EMAs going parallel. They're gonna still try to sell that bull bar. Now, they failed to sell the bar 9 because bar 9 is an outside up bar. That's basically trapped everybody who was selling, okay, underneath the EMA, because those machines try to do the exact same thing that they did with bar 1, sell under the EMA, a strong bull bar, because they got it 2 legs down. So they're thinking automatically that's the right thing to do. So those who actually sold got trapped with that, okay, and immediately limit order buyers were sitting underneath 8, so they got in. Stop orders already got in here. If not, they got in here. So when the stop order and the limit order bulls are buying, we're going to go higher. We ended up with bar 9, outside up bar. You can't expect an outside up bar to sell easily, so it gets a continuation, but they're selling anyway because trading is like a checkbox, a list of checkbox, okay? So you want to check this, but somebody checked that box, all right? So this happened before this happened. We still have to check this box. So that's exactly what's happening. Once everything's checked, objective met, price actually reverses. So that's how it works, to me anyway. So I'm watching. I did not expect this much push. So hats off to bulls. They did a lot better than what I put on the chart as targets. But that's kind of expected because volatility high, so they're overshooting. I just take whatever I take. I always trade with regular price action in mind, but I never try to, try to scalp extreme, because that's when I get in trouble most of the time. If I'm trying to hold something that I'm not supposed to be holding, it's just because ATR is too big, I'm not sticking to the rules. So I stuck to the rules. Yes, I got less, but I didn't expect this bar to be that strong. Now, do I want to buy? Sure, I want to buy again, but I need to see, bar 9 close appropriately. So what does that mean? That it either on its mid or preferably higher than its midpoint. If the body closes higher than its midpoint, expect a pullback regardless to EMA, and then perhaps up to 37.75. So they are selling because that's part of the checklist. They have to, and we might even actually get a bear bar after that. But depending on where the bear bar closes, bar 11, so we have a bar that completely 100% above the EMA after bar 9 closing above the EMA. So we're always in long, okay, bulls. So this bar can be a bear bar, but if the bears cannot close it below the EMA, and if it closes somewhere here, okay, we're going to be bullish. They're going to buy the pullback. Right now, some bulls are trying to buy the close because bar 10, look where bar 10 closed. It closed slightly higher than its midpoint, although I don't know. So I am going to measure. Nope, it actually closed below its midpoint. So this bar might come down to the EMA. I don't know. Or you could just say, if you ask L would have said, just stop the measuring. It closed on its mid, so it's bullish enough. It's probably going to go high. So that's what he would say, I would assume. So that's why the bulls are buying, because it's good enough to buy. And the bulls, what bulls are trying to do, they're trying to close that wick to go further up because they see this as a target. But, okay then. They are going. So where's my pullback? I guess this was it. So they did buy. Originally, they bought here. So what they're doing, that's a 10 point right there. Okay, 10 point. That's 15 point. They're trying to get to 20. Okay, here's a 20 point. This is going to take profit shortly. It's just overshooting. That's a second entry going for a 20-point swing. So 37, 75. That's the target. I would take profit there. It's extended too much. But really, the 40 point, maybe we're trying to get there. Which is right there. So, which is above close of yesterday, high of yesterday, and my channel high is there. But I would say, because it's a gap, you may want to pay yourself 37.75. It has to come down a little bit. Now you have 1, 2, 3, 4, 5 bull bars. Even if it comes down, there are probably buyers waiting here. But if you're long, good for you. You made a lot more than I did. And it's trying to get to 37.75. I would take one tick below 37.50. I would take profit, just in case. If it overshoots, that's because ATR is almost 11 points. And the bulls are trying to close the gap. And this is also probably a leg in a trading range. So the trading range highs are right up here. Can we continue to push into close of yesterday? Sure, 40 point is the actual target that the bulls really want. So good for bulls. They're still pushing to the high of this trading range. But look where they just tagged. I think it was one tick underneath, so that was 37. Was it 37.50? Nope, 37.25. 2 tick underneath the target. They're probably going to get that target regardless. And then they might even overshoot. So I would say this is the second time they're trying 37.75. I'd still take profit and maybe leave a runner if you want to hold on all the way to the 40 point area. Be my guest. So, okay. That's still not, okay, now it's, is it? Yes, 100% target. Yoo-hoo! Okay, so we made money. Now they're overshooting. Be careful, this is probably going to come down. Look at the bar. Look how strong that bar is. It's also a breakout from a very large trading range. What happens to those breakout bars? You know it. It's probably going to come down. So they're taking profit. That upper wick is profit taking. And it's a breakout bar. It's the first breakout bar, but the bulls probably want a measured move now. They want a measured move target all the way. That's the 40. Let me measure that and see. I got out too. I scalped now. I actually ended up entering late, but I made money. So now you see how we're there stalling at 37, 37, 75. We're coming down because it's the first breakout bar from a strong trading range. You know they don't get continuation right away unless it's a news event and, you know, there's nothing there in front of them stopping. Now, wait for a pullback. That pullback could be to the breakout point or as far as towards the EMA. Could happen, you know. We could get a two-legged pullback to the EMA. And that's why I said you need to take profit here. So, but the bulls see a structural breakout and they want to get to the measured move target. I want to measure from let's see if there's another 10 point from that. Okay, so yeah. So I think this is doable, the 63.75. But you need to wait for this pullback and see if we can get continuation. So I am now flat. Bulls are pushing towards that falling trend line on the Globex chart. Also, the yesterday's midnight open, okay, 42.75. But really, they're trying to get to that trend line. Now, why didn't we sell here? I explained this earlier if you have missed it. Asia broke down, okay, and they sold again because they were selling pretty strong and steady underneath that VWAP. First touch to VWAP will sell. It's a good swing sell opportunity. And then they started to sell around 6 o'clock. And but U.S. session tested and sold again. That's expected. I always look for 2 sell opportunities at VWAP if it wasn't tested before. So this is the first test and that's the second test. But I said that be careful, even though we're pulling back to the Globex low, that VWAP is now changing roles, okay? It's no longer bearish enough. There are no sell orders left there. Most likely there are buy orders. So when we get there, we're probably going to break out of it and we're going to get to this falling trend line. So we're getting this basically. Let me show you that again. Remember the last example that I showed you guys? I don't know if you took a screenshot and saved it. That's the reason why I'm showing you. Hint, hint. So here we go. See that? We were down, rejected from the EMA, and now we're back up. We're above that double top, and that's where the bulls got trapped. There's a double top here. Watch out. See how that bull's trapped and it sold? We got a double top here. Look at that. Equal highs. So we could go above it, finish the job. Can we sell suddenly? I don't know. But we could. Okay, so that was good for the bulls. Look what they're doing. The pullback literally didn't even last long. So they're trying to close above 37.75, close the gap and get to the close of yesterday, which is magnet now. But I don't know. I have to wait to see how they're going to close. If they fail to close that bull bar above that line, the price line that I put in there, we could still sell because this is very extended. Now, but this bar 12 is trying to become breakout and follow through. So if it closes as bullish and at the high of bar 11, that is a decent follow through and it could still continue to go higher. So 20 more seconds and let's see how they're going to close this. If they fail to close a bullish follow through, then it's failed. It'll come down with possibly 2 legs. 5 more minutes. I'm sorry, seconds. Okay, that's a very good close, and that's a follow through. So the bulls are trying to follow through this. Now they're going to have to close bar 13 above bar 12 and get to that close of yesterday. Why is this happening? Well, just like down here, okay, we have also liquidity here. Now the market is trying to get that. So they kind of kicked out these bulls. They ran their stops, okay. They might, I don't know if they actually ran anybody's stops there, but that was good enough for them to reverse it. We know there's stops here now, right? So they're trying to get back up. And plus there is a big ticket item, 40-point trend. That's a hard trend. So we're in now buy to close trend. We need a follow through. We do not want this follow through to fail. We have bar 12 closed above 37.75. So we need now a second consecutive bull bar to close above it. If they do close bar 13 above 37.75 and you get that second consecutive bull bar, you better believe that we're going to get up here. At least the close of yesterday and then a push through. We have a measured move target. It's decent. You can also say, well, I think I'm going to take the measured move from here. Let me do this again. I hate this tool sometimes. Okay, so I'm going to take that. 60.75 seems like a much better target. So what am I taking there? I'm not measuring from the high of 2. I'm measuring where actually breakout happened, which is bar 10 and 11. So 60.75 is a slight overshoot from the 40 points. That is probably going to be less than 10 points, 5 maybe. Okay, a little bit more than 5, but that's decent. Now we just need the second bull bar above this higher day, but if you're stuck here, now what do? Say you bought above one tick above bar 11, or you bought the close of 12, and you still made money, but say you didn't scalp and you're stuck. If you're trying to sell against 1, 2, 3, 4, 5, 6 bull bars, there might be limit order buyers right here, and they might buy here to get back up somewhere in the middle to break even. So, or buyers down here, or buyers at the EMA, or at the breakout point, which is high of 10. So let's see if bulls are gonna, see there's already buying underneath bar 12. You see that bar 13 wick? That's limit order buyers. They're trying to prevent, okay, losing money here, right there, because they lost here, even though this was a good follow through. And you're gonna get these problems. Okay, that's a good follow through. Although that body did not close one tick above, it failed. Bar 12 did not close one tick above. It failed. If it were to close here, we would not have gotten bar 13. It would be a quick pullback, but it would be a bull bar already. So because that bar 12 body is like a 1 tick or 2 tick below that high, 11, we're getting this pullback. So what will the upset bulls do? They're going to try to buy here, and they're going to try to get their, okay, entry, original entry to the new entry average price 50%. So, and then there's also breakout test, bar 10 high. So when this bar closes, there might be immediate bulls buying the close of that bar. But if this bar closed like this 13, especially if it closes on its low like that, it's going to scare a lot of the bulls out of their positions. A couple of points maybe underneath bar 12 if we cannot get that pull back to around here, okay? It's an outside down bar also, so it's a very difficult bar to buy. But they're going to buy it anyway. See, they're buying because they're trying to break even. So where's their break-even price? Let's do the exercise. I'm going to get rid of this. Got the point already. So if you bought here, and you bought maybe the close of that bar, where's your exit? Right here. So whatever you do, you should be getting out below that 50% because you bought once, now you're buying two more. That should get you somewhere here to get you out. If it doesn't get you out, then you got to think of what's happening here. You're going to have to buy again. So they're buying down here. You bought here. You still want to get out right here. So you're hoping that this price is going to go up. So, but they also bought here. They also bought here. So now 50% is even further down below. So you're probably going to be able to get out. Let's see. Or we're going to get two legs because you're an upside down bar and buyers are actually right here. And this is what I was afraid of. It's just when you get these stack of, let me close that. When you get this bunch of bull bars going up and up and up into this gap area, and you get this exhaustion bar type looking because it's the biggest body. Yes, you're getting a nice, follow through. The problem with that follow through, I just noticed when I zoomed in, that body never went above the high of bar 11. So that was a problem. So everybody's scrambling now. Whatever they can do to get out, they're buying. They're buying, scaling and scaling in because they want to get out somewhere here. Or they're hoping that this is going to be a pullback. They're going to get a high 1 and maybe a high 2, and this is going to swing higher. So when I see something like this, I'm done. I don't extend it out so much because we're in a trading range. You're kind of testing the high of the trading range, but I think bulls are still trying to get above this double top. Okay, we're still, I think, going to go up here. Eventually, we're just pulling back. This is breakout test. Breakout pullback test. Bulls need to close this body bullish. If they fail, we can plunge right to the EMA very quickly. Now, on that example, I showed you guys a huge bear leg. The bears actually sold, ended up taking out this pretty much everything that bulls did and ended up coming down here. But let's not panic yet because the double top is here. I think the bulls are going to still try to get back up there. If you also count, you got maybe first push, pull back, second push, pull back. We might be going for that third push. Or this is the third push, and we're going to make a double top and then going to come down because here 1, pull back, maybe 2, pull back, 3. So we could finally get those bulls, stock bulls out and make a lower high and then sell. Sure, that could happen too. There is, look, first pullback, second pullback, and a third push. What if this body doesn't close bullish? And that's majority of the bulls will get out. But I don't want to sell against anything that is this bullish. So I'm going to let the market rescue these stock bulls above bar 11, or even with maybe close of bar 12, or maybe even above bar 12. Because bar 13 went above bar 12. So there are stock bulls also there. All right, so let's do this. So here's how you have bought. So say you bought here, okay? Or, yep, you bought there, and you bought underneath here, you still have not, broke even. So there's no break even level set. Or if you bought again the close of bar 12, so bar 13, you still haven't, got your price at the 50%. If you bought right at the breakout test, now look at that. They already broke even. See, this is kind of, you figure out why this bar for 15 is coming down. That's because many bulls found a place to break even because they waited and they bought at the breakout test and the bar 14 went up, and that's why we are coming down exactly from that 50%. So when you wonder why things are happening and why we're not going further more up, that's because many bulls are giving up here. They found a better, lower place to buy that would give them a break even. I do this all the time because there are times that I cannot get my break even, and I kind of look for a reason why that's happening. That's because they found a better price, and that's all they're getting. So now we're getting that second leg down to the EMA because bears want the second leg down. That's their second try sell. Could this be the lower high after wedge? Sure. We're now breaking below the breakout test, and it's getting even larger, becoming a larger, bar. So if you have taken a screenshot of what I just showed you, it looks just like this. A screenshot of what I just showed you, it looks just like this. Look. Look at that bar. That bar. So if we get this suddenly, don't be surprised. Some machines are already buying at the EMA because we know some machines are programmed to do that. They buy, it bounce, and they scalp immediately. That's what they do. That's their job to do. Every time price comes down 2 legs up from above, they're going to buy and they're going to scalp a certain amount, maybe a point, maybe 5 ticks, whatever it is, but they will do it. So that's why that bar 15 low went up, and whomever owns those machines made money. But that doesn't mean there are buyers there that it's going to bounce. It may not. That's all you may get. Also trading range. So what would you do with a trading range? What do I do with trading ranges? I'm going to get rid of this channel. I divide into 3 sections, right? So, okay. Sorry, it's too blue, but you got the point. So I have 3 sections, right? What is happening here? Well, they're buying down here. They're buying successfully. And the price gets here, they sell it. Look, they bought down here. As soon as it went up, they sold. They bought right at the boundary line, went up, sold again, came all the way down here. They bought again. They sold again. They bought again. Look, we're in the first section. They're selling again. So also you can put an invisible 50% there. That's probably the target. What I do with this, I have actually another template. Let me see. I also divide these into 2 sections. Each section I divided into 2 sections. Oh, here, quarters. That's it. I think. Wait. No, that's not it. Okay, that's it. This is the one. See how I identify my boundaries, and then each section, section 1 divided into 2, section 2 divided to 2. Sorry about that noise. Section 3 divided into 2. That happens to be the 50%. I don't know we're going to come back down here. So there could be buyers right here. But look what happened. The way that I use those mid levels, okay, I look to see, if price is going up, but suddenly stops and comes down, do I have 2 consecutive bear bars to come back down here or here? I don't. All I have is bar 35. And then bulls buy again and close above the midsection. That means we're going up to this boundary line, okay? Same thing. Look, we go up. We have 1 bar broke above it, but where's the second bar? So we're coming down with 2 legs. But the bears could not close a second bear bar. This one closed right there on it. We don't have bear bars, so the bulls go back up again. Now we have 1 bar and 2 bar, so they're probably going to sell. And they do sell. See, second leg, and then we go back up again. There are no 2 consecutive bull bars closing to get back up. So we're fizzling here. And then now we have a first bar closed below it, second bar, we're definitely coming down here. They already did come down. So if we come down this fast and the bar is strong, we're probably going to now come down here. So I would sell, and this would where I would take profit, and then I would leave a runner to come down to here. So that's how I use those levels. So look what happened here. We went up, right? We closed above this boundary line, but in the midsection, we stopped because we don't, we can't get above it to get back up here. So we have a nice bear close. That's a strong. So the bears actually sold here, okay? They sold there. They took profit here. We bounced. But where's the second bull bar? So they sell again. This is where they're trying to go. They sold here. Now they're trying to take profit there. So most likely, bears are going to try to push this price here. What happens if we just go here and then sell? That's because there's sellers probably waiting up here to sell the pullback. But your target is probably here. So this is how I look at the range. If I see a range that is persistent and it's trading, within the boundaries, and that's what I use. So if you want to get this, so these are my levels. I think I use 0. I don't use 50%. I don't use 6180. I use 100. Where? Oh, 33. I use 66. I believe that's it. Yeah. And then in between, 16.75%, 16.75, and then 83.33, and then the 50% I do use, which is black. And then the 50% I do use, which is black. So they're still coming down to get their target, which is that midpoint. It's probably going to quickly bounce there as soon as it touches. That's it. They just got it. And it's bouncing a little bit because they're taking profit, those bears. If they do close this bar at the end of 10 seconds down here, bears are going to try to open another bar, and if they do close another bar, they might come down to here. But you see how they're bouncing there? That's because they sold and they're taking profit. I just don't like guessing things. When I saw several times L. Brooks, literally he actually pointed out and he drew it and he said, this is how I do it. Okay, you do it, I'm doing it. So I just grab my calculator and I set a template, and I see a good, persistent, trading range. I apply this template and I trade with this. It becomes a game almost. So We don't have a midsection bear close. Bears are still trying. But if they fail, we could bounce and go right back up to here, to this boundary line. We're also at the 50%, so this is actually the 50%. Bears are trying to close below that midline, a bear bar, and continue down. But if they fail to close it, then that's it. We see how they touched that midline with bar 16 and bounced, and they took profit. They're still sellers and they believe that the price should come down here because of the trading range behavior. Now they're going to try again, but that doesn't mean that they will succeed. So I'm watching bar 17. We came back to that breakout test. Now we're testing again. Let me get rid of that. I don't know if I didn't do a good job. Maybe I should have gotten those two. Well, at this point, we did test that upper resistance line, that upper trend line. I just took the both high, so I connected that line with these. That kind of fit better. So now I know why they're also coming down, because of that trend line. So if the bar 17 closes below with a strong bear body, they're going to continue to sell into the lower, this area. So now this is a trading range. Open of the day, tick price, which is right here, becomes magnet. So we're probably going to come down and test that. There's a breakout point right here, so be careful. Right around there. That's kind of a support. So you can, if you sold or you're still selling, you might want to take profit there and leave a runner to come down here. So at least this way you actually pay yourself. Now that bar gapped down. Bar 18, look what happened with bar 18. The open of that bar gapped down. So bears are in a hurry selling. They're trying to get to places, looks like. Look at that gap. So this bar is going to now sell, and this becomes the reality, this boundary line, and possibly open of the day tick price. Let's see if they can make it. Well, it looks like that example that I showed you guys is happening. Not it at one go. They had, let me see, 1, 2, 3, 4 bear bars. The second leg was a one big bear bar. We're getting a steady sell, which is even better. So yeah, I mean, that last example I've showed like 3 times is happening right now. So did anybody actually sell? Maybe the close of the second entry, which is bar 15, the close of bar 15. If you see a lower wick that big, it's better to sell the close. You get a better fill, better price. So here comes the target. The boundary line is, it might overshoot, but many machines will take profit there. And then we could overshoot and have a wick possibly. Test the open of the day or above, possibly. Test the open of the day or above. Yeah, save that slide because you're going to see it happen again. This day repeats itself. Now, what did I say about this area? I said this area is support from there to there. Okay. We actually tested below that. Can I take this? That's an overkill, but right around here. That's a bummer. If they cannot close onto this line, many bears are going to be very disappointed, and they might sell from the high again to get that price. But bar has still more than 1 minute and 50 seconds, so we're probably going to get that line tested. So do this. Just take 100, okay? First divide it into 3, so you get the boundary lines, 33 and 63. So 0, 33, 63, 66, and 100. 0, 33, 66, and 100. Then take 33, divide it into 2, that's your midpoint. And then add whatever that to whatever this is. So I don't know what that is, but hang on. I'll tell you right now. My math is not that good. So 33 divided to 2, 16.5. Now add 233. That's this line, okay? Now this one's 66 plus 66. That's this line. Get it? So those are your levels. And then create a template and apply it. You know, it's very difficult math. I must point it out. I'm only kidding. I'm not mocking. I'm kidding. So, all right. So we came very close to it, but it's disappointing that bears could not get it, and they're probably going to sell that anyway and see if they can actually finish the job. But the reason why did the bar 18 close like that? Why did we get a lower wick like that? Well, I said that area is support. So you knew there were machines waiting there, okay? Somewhere there or there. They bought it. So their goal is to close this bear bar as high as possible. That's those machines, those orders bought. We're so close to the boundary line, we should be able to get to it. But is there a wedge here? Well, down on this, up on this, down on this, up on this. Well, that's a 3 push wedge down. So now we're the reason why we're also pushing up, because some machines see a wedge there. You see? Down, up, down, up, down. So bulls are trying to buy it, and they're trying to close a bull bar right there. But do you think it's okay to buy it? Some will buy first entry long, above it maybe stop here, and they're looking for a 5-point, but you're buying against a strong bear channel with 1, 2, 3, 4 bear bars, maybe even 5. So I will not buy it, because I think this is going to push a little bit more. It might just come down here. So if I want to buy, first I would wait, okay, this bar, it just went up a little bit. So now we could come back again. Limit order buyers might be underneath. So I'm not ready to buy this. This isn't buyable. That's what I'm trying to say. Because I think these bears are upset that they couldn't get to their boundary line. And I said earlier, they're probably going to sell the pullback to finish the job. And that's exactly what's happening here. I said it ahead of time, so you can't blame me of, oh, she's just going with the bars. I'm not. I said it. We're going to sell probably again because there was a support there and we bounced. Now I want to see if they can actually finish the job. That I don't know. But open of the day is right there. The magnet is right there, so they should be able to get to it. So to me, bar 18 is not the final bear bar at the wedge push 3. Okay, so not a good idea to buy that. Because these machines always going to want to trap you. Because many did buy that pin bar. Why? Because it's a pin bar. Why? Somewhere in the world, somebody actually wrote an article saying that pin bars are great signals to buy, especially if it's at the bottom of some bear trend. Sure, go ahead and do it. And then you'll come back and sign up for L. Brooks' course because you lost a lot of money. Pin bars can be trappy, so do not buy them. Now you got a upside down bar. I mean, did we meet the target? Yes, we did. So this job is finished now. Anything more that sells is basically a runner because some machines want to test the open of the day because it's a trading range. And plus buyers are here in this level. So they need to come down to activate those buy orders. I'm going to take a quick break and be right back. So we tested the lower level, and initially buyers did show up. I see that they never came down and test the open of the day. So we do have a inside bar here. Bar 20 is an inside bar, and it's a very strong bar. Some bulls are trying to reverse here and swing. So what would you do? You're looking for a bull breakout, most likely to come back down and go. But before going further up with a second leg, it's going to want to come back and pull back into that box that you would draw around bar 19. Limit order sellers will sell above or at the high of 20 because they see a strong bear leg down and they think that this is a good pullback so they can sell it. Now, we do have the two EMAs are still parallel to one another, hence the trading range day, right? But look, they're selling, even though the bulls are gapping up above the EMA, they're selling. And bulls are gapping up, they're selling, and it's coming all the way down here. So they could still do that. So the buyers did show up at this boundary line. They probably took profit there, and they're hoping their runner is going to reach up here. So we could go all the way back up here, believe it or not, right around here. There's a climactic bar 15. Okay, so that becomes, okay, they want to test there, or the bar 14, which is a bad signal bar, so they're trying to reach the low of bar 14. All right, but really is the 50% of bar 15 and the high of bar 15 is where they're trying to go. And then they will probably gonna even if they do go up, they will probably gonna try to come back down. So what happened to the sellers? Well, they tried to sell. It came down a little bit, and then now it's going up because they couldn't find enough sellers. It's a trading range day. So every strong buy becomes a bull leg in a trading range. Every strong sell becomes a leg in a trading range, and they just reverse it. So you just trade in between the boundaries. Where's the best place to sell? Up here. So that's why the price market is trying to reach there. Now, according to that example, we had one pullback, 1, 2, 3, 3 legs up. So it's pretty strong now. I think the bulls are trying to reach 37.35 area, 37.34, 37.35. But we do have a breakout, although no bull bar yet. So this bar needs to close outside of this box. I would look for a pullback before buying again. Because this is a wedge, right? So it's a lot better defined actually. Now leg 1 pullback, now leg 2. pull back, and that's the leg 3, and that's the last bar. So what am I looking for? First, I need to see a bar that closes outside with a bull body. Then we're probably going to come back to the 50%, possibly, and then try to go up with a second leg. So did we test the bar 14 low? Nope, we have not. So we're going to test it. Did we test the 50% of a midpoint of bar 15? No. We'll still want to get there. So they're trying to close the bar outside of this reversal box. But I think there will be a pullback, and then they will buy. For a swing, bulls are going to look for a second entry long. If you're counting, this is your low. Or you could say, hey, this was the first entry. We're getting a second entry, and the swing is going to be a lot more, higher. Sure. But I think what's going to happen is that bulls are going to buy. You see how we're pulling back? They're going to buy it. We're going to go here. EMA is going to come around. We're going to come back to the EMA, okay? And then we're going to buy, and then we're going to go. That's what I would look for if I'm bullish. So, but at this point right now, I'm looking for a pullback to that box. If they don't close inside, that's fine. If bulls want to go, I know where they're going. They're going to test the low of 14 and a midpoint and the boundary line. That's what they're trying to reach. First bar, many actually bought the close, okay, of bar 21. Some will look for a pullback again and probably going to buy it. But the goal is to get and test the 14 low. I do like a good pullback somewhere here before I buy. But if you're still long, that is where we're going. 29.50. No decent pullback yet, so I didn't rush. I didn't buy the close of bar 21. I want to see that pullback. So I'm going to wait for this bar to close. Okay, I just read what you just wrote there, Alex. So the bar 1, when the bar 1 opened, it was a big, strong bull bar. And I looked for, and I kept saying, if you want to buy, you have to look for some kind of follow-through bar, which is the second bull close. That's what you're looking for. Even if it's a weak one, you still have to see it. Do you see it? No. Bar 2 is a bear bar. So we're getting a rejection at the EMA. So we're coming down. So I'm looking for now some kind of, maybe I was looking for a pullback, maybe again go, but at this point you get a second bear bar, right? So now you have big up and then big down. Big down is bar 2 and bar 3, right? So what does that mean? Well, you're just not going to buy it because that could still come down. You have 2 bars now. And bears got continuation, bar 4, but they're selling into a trading range. I think you wanted to go long. So you're saying spike. Spike from bar 7 to bar 12 is, okay. See, I don't see a spike there. Why would you say there is a spike there? I just took profit there at the low of 14. So, but why I don't see a spike here. So all I'm seeing here is that big up, big down, confusion. We're already in a trading range and we're at the trading range lows. I'm not going to sell into those trading range lows, no matter how this is exciting. I believe I sold this because I sold 2 bars, and then I thought the selling here is probably going to give me a couple of points, and that's about it. But look, sellers actually got stuck there. There's no spike here. Basically what you're getting here is the first entry long from the lows, okay? You're looking for a second entry long. So we might be reversing, and there might be some kind of a wedge here. I kind of see it, right? So here maybe 1 pullback, 2 pullback, and third push. So here we go. You put your reversal box, right? Do you see a bull bar closing above bar 4 high? No, I'm not ready to buy it. And here is the 50%. Do you see a bear bar closing below that? No. Look, second bull bar, high close, high 1, high 2. That's where you buy. If you buy above bar 7, how would you take profit? I posted charts, and I get this question a lot. Everybody's talking about 1-to-1, but 1-to-1 or what? Okay, so I get the same question from the same member, constantly asking me 1-to-1. Okay, so if you bought here, how would you get your 1-to-1? If I bought here and my stop is here, that's my 1-to-1. Okay, so you have to take profit no matter what. And what happens to here? Are you trying to go to 2-to-1? Fine, that's your 2-to-1. So you got a 2-to-1 target there. Or the way that I do it, and I believe the way that L scalps it, even if he's swing trading, he looks for 5-point scalp. So you bought here, second entry, okay? That's a 7. Where's 5? 5, you made 5-point scalp with that. And look at the bar 8 upper wick. Why do you think bar 8 ended up having a long upper wick? Because every other machine is scalping that 5-point. Okay, so, but now bar 8 closed on its high. So we're still buy above bar 7. Where do you think they're going to go? 10-point? Where's the 10-point? Right there. Why do you think the bar 9 has a small upper wick? Because every machine who scalped bar 10, okay, bar 9 got a 10-point there. So you got that upper wick, but the bar 9 closed on its high. So no one is selling. You cannot sell. You just paid yourself there. There's nobody selling. What's the next scalp? Alex. Nobody answer. I want Alex to answer it. What is the next scalp? Where would I go from here? I'm still long. Is he here though? Maybe he's not hearing me. I think he's in. Okay, he's here. He's laughing. So what is the next scalp? You don't know. That's why you're asking, and I'm glad you asked. The next one is 15. Where's the 15? Right there. It keeps overshooting. Why? Because ATR is so big. If you actually move your mouse to the ATR, look at the value. 10.91. That's actually 10.75. 3 ticks. So no wonder they're getting these upper wicks above the 15-point. But why is the bar 10 upper wick is so big? It's because every other machine still scalping. Now they pay themselves at the 15-point. But look where the bar 10 closed. It's not the most strongest close, but it closed at its midpoint. What does that mean? That's still a bull bar. There's still nobody selling. There is no bear bars. Sellers are not entering the market because they know these bulls are going for the 20-point. There is the 20-point. And they even overshot it a little bit. They ended up going up to 27, but that I didn't care for. You go for 20-point. Anything more than 20-point is an overshoot, because right at that time, here, look at the ATR value, 1175. So it's overshooting. It's telling you you might be going for another 5 points from 15-point to 20-point, but I'm printing bars that are more than 11 points long. So you know this is gonna overshoot. So between the 1175 and you went for 5-point, right? So that's 675, all right? So if I scalped normally at 20-point and it's overshooting 675, check this out and tell me if I am accurate or not. Look, did you see how I made that math so quickly? and how I knew that this is exactly where they're going to take profits? Do you want me to repeat it? Why it overshot and how it overshot and how I measured it? You got it? Okay, good. But I'm going to do it anyway. So this bar, this is where I made a 20 point. But as soon as it hits the 20 point, I'm going to do my due diligence and I'm going to look at what the ATR is showing right there, even here, okay? It's showing me 11 point, I mean, 1 point is like 12 points almost, okay? But here, 11 point, 11 and a half, say 11 and a half. So 11 and a half, we went, where's my, okay. So we were at the 15 point, we went for another 5 points. But ATR is 11 and a half. So take out 1150 minus 5, okay, 650, right? So, hello. So measure 650, even here, 650 right there. So you made money, an extra tick to cover everybody's exit. You don't even have to wait for this bar. You get out with bar 12. That's why it's overshooting. It's simple math. That's why you use ATR. Your ATR should be on each tick, not on bar close or price change. It should be on each tick. So that's that. So that's how I get it. Or, listen, if you're a risk-reward trader, that's fine. In the course, it'll be covered as risk-reward, right? Because it's the common, knowledge. If you buy there, where are you going to put your stop? You're not going to put your stop here. You're going to put your stop under lower low, right? So say you put your stop under, if that's the low, you add another maybe, I don't know, 2 extra ticks. So I put my stop there. I bought there. That's my 1-to-1. Here's my 2-to-1. 40-50, right there. 40-50. They reach 2-to-1. So you can take that. Either or. All right. So now what's happening? Okay. So the bulls bought 1 tick above 20, maybe bought the close of this, went up a little bit. They kind of met the target. Okay, right there. See? Bar 14, I said we're going to test bar 14 low. But where is the pullback? Now we're getting a pullback. But what's up with this pullback? How come the bulls are not showing? It's also the 50% of this leg up. The bears were there. So now bears printed a strong bar. So now are they printing a bear bar below my 50%? Midpoint of? Yes. Can I still buy this? I don't think so. At least I'm not going to touch it. Because if the bears actually close a bear bar here, this reversal from this wedge is a dud. That means they're going to try to sell. Because why would they sell it? Well, they kind of left the open of the day tick price behind. They never tested it because many bears were going for it. So they might have gotten stuck here. So let me get this out of the way. So if you're selling and your target is, try to think of the psychology, why would things happen? If you're selling, everybody knows, including the machines, that open of the tick price becomes a magnet. So you sold here and you want to, continue. And then you get this. Okay, what's going on? And then you get this. And then you get this. Where are you going to sell? Some may have sold here above bar 20, which I said that they might try selling. It actually did come down a little bit, okay? But there were no sellers because they're probably thinking this is a strong leg. So most likely this leg's 50% is where the sellers are waiting. No one's going to touch it until price gets there because they also know bulls are trying to reach here. But as soon as bulls reach there, okay, they're not able to close bull bars above here, so they're not going to go further. Now the bears take it and they sell it. So because they're trying to reach the open of the day tick price and they're trying to, maybe break even, I don't know. They already have broke even right there, but they might be trying to come further down here. So now, can I actually buy this pullback? This pullback died. They're trying to close a bear bar. I'm not interested in buying. At least I'm not going to buy it until they reach the open of the day tick price, which they just did. So it's a trading range behavior. We go up, we come down, we go up, we come down. Now look where we're testing. We found buyers with bar 19 low. We tested there, but it only went up to the bar 14 low. Now we come back. We know that this area is a buy zone, okay? So what do you think is happening here? Can the buyers still show up? Sure, but I also see something on today's, okay, price action. I see a head and shoulders pattern. So are the bears actually trying to sell this and break below this trading range? They might be. I don't know. I'm going to wait until I see a strong bull bar to buy in this buy zone. I don't see it yet. Can this still be a pullback? Well, it's kind of made a new low, so this is definitely not the wedge. So we now have maybe a new wedge. We might still come down with a third push after pulling back up. Or is this the wedge? Down on this, up on this, down on this, up on this, down on this. So we have overshoot with 2. That's 1, that's 2, and that's 3. So now, okay, when this bar closes, I'm going to use its upper level and a lower level as my reversal box and see if I can actually buy it. And plus, this could be first entry long, and bulls might be trying to get the second entry long here finally. So it's a pin bar, but we don't know yet. There's still 2.5 minutes for this bar to close. I can't really say anything because it's going to change. If I say it's a pin bar, it's already changing form. So let's just wait. Could this be a head and shoulders and there's a neckline here that they're trying to break? Or the neckline like that. If they do print that a big bear bar, they're going to try to sell it all the way down here to the mid-level. And some bulls might be looking for some kind of wedge. Where's that wedge? Maybe 1, 2, 3, and 1, 2, and 3. So we could fall all the way down here before buying. Now this is a neckline. I don't see a break of the neckline with a bear body yet. And this area, other than being, nested wedge lines, it's also magnet. Low of day, low of yesterday, and 1 hour EMA. It's still down there. So on the hourly, we're testing the last hour's low. Now, can the limit orders be here? Well, I don't know. I mean, are they buying underneath this bar? That's a very big bear bar. It's kind of difficult to buy. So this tells me we might sell a little bit more. We're going to break out from one end of the Globex, and we're closer to the Globex low, and bears are trying. So everything looks like bears really want to sell this is down to these levels. So they already just started. So they broke the neckline, and they're selling. We might still go back up and test this neckline and then sell. That's how it works. When you break a neckline, you want to see a pullback and test of the neckline before selling. But there are probably sell stop orders 1 tick underneath bar 25. The midline, the mid boundary line becomes a target. If they do close this bar bearish, you need a bear bar below the boundary lines, okay, in order to keep selling into these midsections. Magnets down there also attracting. Buyers probably won't show up before 37.07 or 37.05 area. tested, so we have to test there before buying. Many bears sold right up here on the Globex. That's why I have that line. Okay, or in the sell zone, which was this area right here. This seems to be the target. We're coming down to test it. Let's see if we can do it. That is above 37.05, so it should be doable 37.06. But I want to see this bar close on its midpoint at minimum, or preferably on its low, then it would just quickly come down. What if it doesn't? That means bulls are going to try to close this bar above the boundary line, and they're going to try to go back and test this or eliminate this, what looks like a head and shoulders. So we broke down, we're coming back, but I need a bear bar. I didn't sell this because I don't see a bear bar closing below the boundary line. This is the boundary line. If you sold this, you just chanced it. You just chanced coming down here. But there is no bear bar like this. If you had a bear bar like bar 15, then yes, you have every right to sell it and take profit at the midpoint and maybe have a runner to this boundary line. Do you see one? No. Yes, we broke the neck, but patterns are, you know, they're not 100%. Just because I see something, that doesn't mean that it is. I have magnets here, but if they don't want to sell, what can I do? I'm showing you, if you're using this trading range boundary, you know, setup, then stick to the rules, right? So, like here, they sold and closed one, so most likely they're going to sell, right? They sold and closed one underneath the boundary line, so they're going to sell. Just trying to see the one that actually failed. Like, look, right here. They closed one right at the boundary line. Can you sell that close? No. Up until here, bar 15, you cannot sell it. It actually went back up. Look, they closed the bull bar right here. Can you actually buy this? No, it didn't close above it. It's a big bar, so most likely it's going to pull back. And it did. Finally, they closed the bar, bar 8. Maybe you can buy, put a buy order, and then you go long. So if you sold this, you just didn't stick to the rules. Now, whatever happened to my inverse head and, the head and shoulders? They broke it with this bar, but where is the pullback and sell? It's not there. So patterns are, they can fail all the time. I can't really use them. They can still sell, but at this point, it's just anyone's guess. I don't know what they're going to do. Now, they couldn't come down to my 37.07 and 37.05. Can they still do it? I don't know. Right now, we're testing the buy zone and they're buying. So this is confusing to me. So I'm going to stay out of this until I see another bull bar. Then I may be interested in buying because we have an outside up pin bar, 26, but it didn't close one tick above 25. Yep, it didn't. It just closed right at the same level. Now it's a pin bar. I don't trust pin bars. Pin bars generally get tested at the 50% level. So since we're in a trading range and the bars are overlapping, this could come down and then it may buy. So I'm going to wait. Can they still sell it and come down here? Sure, they can. Pin bars are, like I said, they're not reliable. If they come all the way down to the 50% and they cannot find buyers, it's going to keep selling, which I have seen pin bars do that. So I don't know. I mean, buyers still started to show up at here, and I'm looking at the, because it's a zone, it's a good area to buy. This area is always a buy. Look, they bought here, went up, they bought here, went up. Now, I'm looking at the hourly bar, and I've said there might be some limit order buyers there. Now, they have tested the 1 hour EMA. We didn't. So I don't know if this is calculated right on here. Maybe I don't have enough days. I have 30 days. I don't know why I have 30 days. So I'm going to do 10 days. Nope, it's still far away. But it's on the 1 hour chart, it's hourly chart, we're already tested. So it's bouncing because we're bouncing from the EMA. This might right here, underneath, there's some, buyers there. That's maybe what we got, but I don't know if this is strong enough to buy. I'm not interested. So I didn't buy one tick above 26 because we could still come back down here. And that would give us a 1 pullback, 2 pullback, 3. That's the one I would like to buy. So what I'm watching right now is the 50% of bar 26. I want to see what the bulls are going to do there. Are they strong enough to buy the 50% and then finally go back up and then give me a maybe better entry to go along? So that means they could do two things. They could come down to the 50%, buy and close this bar bullish. Then I'd be interested in buying for sure. But if they cannot do that, I'm not going to touch it. Oh, so we had, I removed the channel, so I don't know what we did there. So here's support. We're not really bouncing from the support strong. What if we break the support? This is where we end up coming down to. All right, we're at the 50% now. Where are the buyers? This is probably going to bounce a little bit, but if there are not enough buy orders, this could just dump. Because of this area, this is what I'm interested. So what happens then? Would my head and shoulders become valid again? Oh, sure. And this is your neckline. All right, some 50% buyers did show up there. Look at the lower wick of 27. It bounced, but is it good enough? Did they close the bar on its high? No. Some buying again, but I don't know if this is good enough to buy. I need to see a bull bar. So if they do close bar 28 on its side, then yes, that's a good idea. Maybe you can buy, but I'm going to wait until I see something concrete. Because I think they're trying to come down to 3707 to 3705 area. If the bulls fail here. If they do close this bar bullish, then they're going to try to close above EMA. Now, could we get a bear flag there at the EMA? Possible. There is a diamond pattern forming now. Major reversal, major breakout actually. So let's take a look. Let's get an idea where this can go. Okay, so diamond patterns can do this. If it's coming from down, okay, it can literally reverse back up or come back right down. So we have this, we have that going on, right? So we have a diamond pattern. I think we're going to end up selling this. We were up, tight trading range, we're up, tight trading range. This right here is, I think, attracting market right here. So if we do sell, this is area of interest, we're going to end up stopping here. low of yesterday, there are probably buyers there. So I'm not really excited about buying anything here just yet. Because anytime you buy it, look what happened at the EMA, above the EMA. They sold that bull bar, closed on its mid-level. They sold that bull bar. They even sold this. So they sold that one. I mean, the distance is now even smaller. So I don't know if the bulls are doing enough here to reverse this back up. Bears want to break this down so they can get some kind of a measured move target. And you also have inverse cup, 2 cups in fact, so that becomes the handle. And bears need to break this. You see that double bottom, this one, bar 10 and bar 26? Bears need to break that with a bear bar. If they do that, you get a measured move. First measured move and a larger one to the downside. You see why I'm not so excited about buying this? I don't see the second entry long either. We made a new low here. So we came down, we took out that low. It's kind of, that's why I think that second entry is struggling. If they do show up, bulls are trying to take us up to just about 23, 24 area again. There's also a wedge there, bear flag. Look. Up on this, down on this, up and down, up. We might just come down, I don't know. Okay, so is this a second entry long? Technically, bar 28 went above prior bar's high, but it's low, it's not lower, so I am not going to buy it. Don't like it, don't care for it. Because bears see a wedge there. It's very difficult to count, but if you go to 2-minute chart, you'll see it clearly. The wedge, bear flag, see it? 1 down, 2 down, 3. So they might be seeing some kind of a wedge there and a bear flag. So double top at the EMA with a neckline. Bears want that neckline taken out. Listen, if bulls want to take over, that's fine, but they're going to have to show me. I'm not going to touch it. So can we start a small pullback bull trend here? Okay, I'm going to get rid of this. I want to clean my chart a little bit. So you guys got the point. I want to get rid of this. Okay, I want to see the chart a little bit better. So we have a triangle. We have not touched down here with the third touch. For bulls, if they want to break out of this triangle and if they want to keep going back up to the trading range high, they not only have to break this trend line, okay, or you can say, well, I'm going to take this. Okay, fine. And take that. We're already breaking out, okay? And we need to start a small pullback bull trend. That would take us up to this level, maybe further more. But bears have been selling at the EMA, okay, above the EMA. Every bull bar they see, even the ones that gapped up. So that's a second entry. Their bulls actually bought one tick above 28. I didn't buy it, but I did say if you buy it, we're going to go up to 23, 24 area. So we ended up testing actually 25 and a quarter. Now, if this bar closes on its high, then, okay, I'm going to say, all right, so that's a good close. Maybe we have double bottom, lower low, and that's not really a double bottom, lower low, but if I'm looking at here, that's the neckline. Bulls are trying to get to the neckline. Or I could say, look, I have possible wedge here, wedge bull flag. Okay. If the bears fail to sell, here, then we have a wedge bull flag. So that means we're going to try to get there. If we close above it, then we're going to go up here. Then I'm going to look to enter bullish. But I don't like any of this. So I really think that bears are not going to let this go unless I see bull bars are closing above 37.28. If they do close above 37.28, then I'm going to say, okay, fine. Bulls got the upper hand, and they're going to try to reach towards this high. So they're going to have to close a bar somewhere here and possibly test that neckline and then push towards these highs. Okay, so this right here becomes resistance, and this is where they might be targeting. But we're still not always in long bulls, okay, so we're still, oscillating here. I found this very difficult to trade. You can hear me, right, struggling because of what the bear's been doing above the EMA. They've been selling every 3-4 bull bars, and even the gaps they've been selling. All right, so now we have a 29 closed above EMA. Bulls need a second bar, okay, to close, to be always in long and go back up and test here. Fine, that's good. I'll buy it. But what if the bears sell just like they did here, they did here, they did here? I don't see a clear direction, and that's because it's trading range. And we're smack in the middle of that trading range. That even makes it difficult because you have to trade the trading range from the extremes, either from the down below or up above. So that's why, another reason why I'm confused. Okay, so for bulls, say I want to be bullish, okay, and I'm looking for reasons to enter bullish. So I'm looking for around the EMA, I am looking for a lower low. And this low is a slightly higher, and this one even higher. So this is the higher low. So this is good. Now I'm looking for a good bull bar, maybe a good pin bar at the EMA, like that. Majority of its body above the EMA. I will buy it, and my stop, I'm going to start swinging. My stop will be between 26 low and bar 4 low. So somewhere here, I'm going to put my stop, maybe just around underneath that. If I see that, I'll buy it. Now, bar 29 is okay, but it's not okay. You know, it's not the bar I'm looking for. It's got an upper wick almost the same size as the lower wick. I'm not thrilled with that bar, so I'm not going to buy it. I'm going to wait. Because look what's happening there. Bears are still trying to sell any decent bull close bar at or above the EMA, just like they did with 22, just like they did with 14 and 12, just like they did with bar 1. So if I want to buy, I need to see a great pin bar. See if I can show you some example of that, what I'm looking for. RTH doesn't set that up very often, so I'm going to go to ETH. No, let's go RTH. Okay, it's right here. Right, so that is the lower low. That's a slightly higher, or that's slightly higher. That's a higher low. I want to buy it. I do see a beautiful pin bar, bar 70, but did it close above it? No, I cannot buy it. Now I see another one, bar 73. Did it close above it? It did, but majority of 90% of that bar is below. Can I buy it? No. So that's not a good setup. And in fact, they sold it. So let's see something else. Okay, so here we go. So look at here, right? So you have a higher low, lower low, and look, that's a beautiful bar, okay? That bar is telling you can buy, but it's not the pin bar I'm looking for, but it's still good. So you can either buy there or buy one tick above or wait for a pullback, but this is going to go up. So that's what you're looking for. You can buy again, but that's about it. Or here, which one is lower? No, this is exactly identical, but they still try to buy it, didn't work. So here, look, that low is higher than that low, and this is a higher low, right? So I'm looking for a pin bar that closes above the EMA. Look at that bar 19. I love that. I'm going to buy it because I'm swinging. Now I'm looking for, if I buy here, put my stop here, that's my 1-to-1 right there. And a swing 2-to-1 right there. Look at that. Market actually reached 2-to-1 before coming down. Look at that. Reached 2-to-1 and before coming down. So that right there is a risk reward kind of measurement. So now I'm trying to apply exact same thing to here, but I don't see a pin bar to buy. It's not there. That pin bar was 26, but it's below the EMA. I cannot buy it. I need something that closes above EMA. I don't have the buy signal. So what did the bears do? And I was all kind of confused. Look what they did. Was I right for not going long? Yeah. They sold here, they sold here, they sold here. They're doing the same thing. Why? Because the two EMAs are parallel to one another. So now they're trying to come down to, they're trying to make a wedge bottom. Maybe they're trying to come down here possibly. Or there's a maybe wedge there. So it might be trying to come down here. But there's another one now. I also, if you still want to buy it, you have to think about, you're looking for this, right? So a low, another low. It's almost like a head and shoulders, but really is not, right? But you want this low to higher than that low. Okay, so it's like this. You see this higher, and the EMA is coming like that. You want to look for a really nice bull bar, okay? You can buy the pullback or you can buy it. This is going to swing. It might even come down one more time. You can buy that too. Those are great swing setups. We'll give you major 1-to-1, 2-to-1. And those 1-to-1s are going to be huge. So your reward is going to be big. And the same thing applies also to bears. So let's take a look. So what am I looking for bears? Well, I'm looking for a higher high. Slightly lower high, but much, much lower high. So that lower high is actually lower than that lower high, isn't it? And this is the higher high. So what am I looking for? I'm looking for a bar that has a big bull body, bear body, and closes below the EMA. Now, who's going to tell me which bar I would sell? If you're looking for from this lower high, which bear body I would look to sell? Which body that would excite me? And then I would sell again. So who's going to type it up for me quickly? $13.17. Going once, going twice. One more. Anyone? I would sell bar 17. Okay. And then I would sell the pullback, that one, 23. So anyone who said 17 and 23, 23 is the second leg down. It's the pullback and you sell again. See what I mean? So basically you're making money. Say you sold there, you made about more than 5 points, and then you wait for a pullback, and sold there, you made about, say, 12 points. So that's 17. You made 17 points. But it's not swinging now. So that's a problem right there. It's because we're in a trading range. But look, 30, they're selling again. Can they make another 5 points there? They already made it. They made more than 5 points to cover their commissions. Bears are making money, bulls are not. Maybe bulls are making money, but bears are making much, much better. All right, so now what? Well, for bulls, I'm seeing a similar setup, right? So maybe this, and this, but that low is now lower than that low, so I'm not interested. How about this? Get that out of the way. How about here? So can we get another higher low? I don't want to see bears breach that. If they breach that low, we're never going to go up. We're going to keep coming down. So this lower high, this higher low, this lower low, this one is still higher. See, it's higher than that low, 64. But now bulls need to stop these bears here. If they still want to go up, they got to stop it because this low is now higher than that low. What if we just go up and then print that beautiful buy signal? Oh, I'm going to buy that. Best believe it. Because as the EMA comes in, they're going to buy again. It's going to go up. But right now I'm watching. How do I eliminate that? If the bears break a bear bar below bar 26 or close a bar below 26, then that's it. I'm not going to look to buy. This is still bear market. It's still trying to come down. We never turned always in long. We were here always in long, but it just didn't go anywhere. So now, what am I looking for? Well, we might have a double bottom higher low bull flag with wedge. Okay, fine. I'll give bulls another benefit of the doubt, but they have to close bull bars now. Bears are still trying to take out that 26 low. I'm trying my best to give the bulls a chance, but they're not doing anything. Today is difficult. So it's only easy if you wait for price to come down to these lows and then you buy and you make 5 to 10 points scalp. If you get a runner, that's great, all the way going up to the high. Or you could sell from top, okay, and do the same thing, and then take profit down here. That's an easy day because you know how to trade the trading range. But price action is not that easy, right? So we're not doing this. We're not coming all the way down, going back up, come back down, going. We're not doing that. So I cannot buy it because we now breached the 26 low. And you have a gap bar, 3 gap bars. So bears are trying to gap down. They see a cup and handle, and now they're trying to get their measured move. So magnets are below, 1 hour EMA, and the low of yesterday. Did we reach 307? Yes. I'm sorry, 3707? Yes. What was the next? 3705. Here it comes. So if you actually didn't listen to anything I said, but only listen to EMAs are parallel. You see a bull bar going above 20 EMA, sell that, close. Especially if you see a bear bar. You're swinging. Look how much you would have made if you just listened to what I said. Bar 30. So selling bar 30 would have given you 12.5 points. So it's probably trying to get the 15 point, which is right there. And then the 20 point, which is right there. What do you mean by why not under 13? 13 did not close below EMA. It needs to close below EMA, right? So the rules are like this. So your price is coming down, coming down, coming down. EMA is coming down like this, right? And it goes and then makes a lower low. You're trying to buy. So we come down and then we finally make a nice bull bar like this. That you buy because this is going to swing. And then it comes back to EMA, you buy that one too. It's completely opposite. For bulls, we want to see the bull bar closing above the EMA. For bears, okay, so we make a lower high, we make higher high. We make another lower high, which is lower than that lower high, okay? Now I want to see, okay, a bear bar upside down, maybe a pin bar like that, or a bar majority of its body close below the EMA. You sell the pullback once again. You're swinging. So completely opposite, just a flip chart upside down in a way. Okay, so that's that. You kind of see it right here, right? Like bar 23 was one. Again, 30 halfway, but they sold it anyway. 17 was your first. If you sell bar 15, you don't know you're going to get swing because it's still always in long. Remember the always in overbought and oversold conditions, always in long, always in short. If you have two bars closing above EMA, that's always in long. They can buy that pullback to EMA. So if you sell a bar that did not close below EMA, you're basically 50-50. You're just throwing a coin in the air and then hoping it's heads or whatever. Trading range behavior. So still no breakout. We're coming towards down to buy zone. We're probably in the buy zone. But I would like these bears to push us furthermore down to, let's say, 37.04, 37, now 03 area. They have not really tested the 37.05. They probably will. But we might end up coming all the way into like 37.03 area before I even consider buying. A bunch of magnets here, so. We're so close to the Globex low. Looks like it wants to break down. So I have a trend line here. Okay. We need the third touch. Okay. How do the broad channels work? You have another trend line here. So maybe like that, right? Just about. So if I'm in this channel, go back to the lessons. We want 3 touches. So I'm not ready to buy because most likely we're going to test that line. And that line happens to be right around 37.03, I said, but happens to be 37.02-ish. So I'm not in a hurry to buy anything yet. I don't even have a signal bar. So let the bears do their thing. All right, I am done with my session. I still want to trade because I think there will be a good breakout coming or reversal. So I want to trade that. I'll post in Discord. Now, I'm going to change gears a little bit with this, what I was showing you earlier. So bulls didn't show up. So I'm going to look to see if I can find better examples. So hold on. So it's a trading range day. I'm in the encyclopedia. So I'm in Trading range day. Right, let's take a look. We went up, down, but we didn't go up. So you see, our trading range is not that defined well. So maybe this, look, they're selling these EMA. And then finally it goes up, but they sold again. At the end of the day, we get this breakout, but we never broke down. So somewhere at the low of the trading range, they found buyers. Could that be us? Possible. Down, down, still no break, and then it ends within the trading range. That's boring. Okay, so look, bullish comes down, bullish comes down with legs, 2 legs, even 3 legs, leg 1, leg 2, leg 3, leg 1, leg 2, leg 3, and then the buyers start to show up. This could be us. But eventually it ends up at the EMA. How boring. So this seems like a good one. Look, they get a double top and double top, double top and double top. So we have one there and we have another. So you guys got the point, right? So the low's holding unless they break it and get some kind of a measured move. They can't. How would you get a measured move target? Look at this. What's breaking that structure is a wick. It's not actually sufficient to measure for a sell. There's nothing there. I need to see a bare body breaking that structure. Another one right there. Maybe this one got it, so I'm going to measure that. So if I take this as the structure, they're just about to take their profit. Or maybe they already did, I don't know. Or if I take this, then that would have been target, which happens to be the trend line. So can they still sell it? I don't know, because I now see that wedge, which I was waiting for. So bulls are trying to close a bull bar, and they have now, unfortunately, it's not inside, because 33 low, 1 tick lower than I think. Yep, so we now have micro double bottom though, 33 and 34. So we have a wedge and we have a micro double bottom. So the bulls are now trying to buy it and trying to go back to the EMA. You see that? That's not only a wedge, 19, 26, 32, and then you get a double bottom. So they're trying to get some kind of a reversal. If they do close this bar on its side, they're probably going to get a second entry to go back to the EMA. But is it good enough to buy? I don't think so. I'm not going to buy it. Now, another reason why they're buying, who's going to tell me why? Other than being wedge and a micro double bottom. I mean, this bar hasn't closed yet, so we don't even know if that's a micro double bottom. Well, it is now. Okay, so it's closed. But that's not the real reason why they bought it. Which bar is the reason that they're buying here? I need a bar number. What have I been saying? Something that is so, no, not profit taken. I'm looking for a bar number. There's a reason. There's one bar sitting there and screaming at you. Yes, thank you. Marius 10 and 10 for you. So bar 32, why? Well, that's the strongest bear close. When the EMAs are parallel like this and bears are gapping down, the bars are gapping down, they're going to buy anything that qualifies. Which qualifies? Bar 32 is a strong bear bar. It's a trading range day. They're going to buy anything they see bearish. They're going to sell anything they see bullish. Bar 7. Bar 7 is here. I'm talking about here. I don't know what to thinking with bar 7. I'm curious now. Is it because you guys are looking for some kind of support with bar 7? Right there? No. I'm looking at here. So you get the bar 34. First of all, they started to buy to close with bar 33. They did. They started buying, right? When? down, went up first, and then came down, and it closed right there. So confusion began right there. So now bar 34. Bar 34 is an outside up bar, believe it or not, because its low is equal to the bar to the left, 33. But it's higher than the bar to the left, bar 33. That makes it a inside, outside. Now we have an inside, so we have a breakout mode now. So inside bar 33, outside bar 34. If this bar, the third bar, the 35, bar 35 closes on its high, bullish, we're going to end up getting a second entry long. However, if it closes down here, then bears are going to sell it. We're probably going to find ourselves right down here. So depending on how this bar closes, we'll see where it goes. But you got a leg here, strong. Bears are trying to get another leg down. So probability shifts to the bear side, right? So I'm not going to buy against it. So most likely, because of this bear leg, okay, and the market is selling, this bar 35 could close on its low at the low of 34. If that's the case, then the bears are going to try to sell that and break out to the downside. But there's still 2 minutes, so you have to wait. If you sell, you're basically selling right here with a limit order because you got 4 bars overlapping. So you sell above things, right? Limit order sellers will sell here above that bull bar. Body open. So just wait. You're also selling into trading range lows, so that's difficulty also. So if you're selling, you have to have good reasons why you would sell into the trading range low. First, you have to look to see that bar closes bearish, and then the prior short-term sentiment is bearish. So then you would expect another leg, even if it's a small one, down. But if the 34 doesn't close bearish, then you just don't sell. So inside, outside, inside. Half a minute left. Okay, so it's closed slightly below its midpoint. Now look at the other bar. Look at the new bar. Where did it open? What do you guys see there? Gap down. So bears are in a hurry now. They see this as breakout mode and they're trying to sell it. I didn't sell it. But they're probably trying to get that breakdown. This is where they might be wanting to go. 1 to 1. And then 2 to 1. Right at the low of yesterday. See how that inside, outside, inside, the bar closed semi-decent below its midpoint? That makes it a bear breakout. And then the next bar gap down. Like literally everybody just hit sell. And that's the 1 to 1 target. That's an 18 tick reward. And then you get 36 ticks. If you measure from here, that's actually a lot more than that. So if you sold here, you would get 10 points, almost 11 points. So take out 2 ticks. So that's 10.25. So you make about solid 10 points. If they can close a bar underneath that level first. But they got there 1 to 1. Look at that 1 to 1 right there. All right, so that was a good demonstration. I am done. I just want to see this breakout. And if they do close this bar, they're going to continue into here. Now, they're probably going to make a, if you sell 1 tick under, you didn't make 5 points. Now, why wouldn't you make 5 points? It might still come down, but that's not the way you sell, right? This is a trading range. So you're trying to sell with a stop order in a tight trading range. Better to sell at the close. Then you made your 5 point right there. it went additional point to fill everybody. So if they can close that bar down here, they're going to continue down for 10-point mark, which is right there. That also closer to the 2-to-1 target, give or take. You guys have a great day. Let me check. Anyone after me today? Nope, no one's after me. So I'm going to end the webinar, and then I'll be in the Discord, so you can find me on both Discords, okay? Have a great day. Tomorrow is Tim. I won't be on. I'll see you guys next Monday.